Live now. Hey, we're live.
You guys?
Hey, everybody. Look at him over here on his computer. He's looking at
playing.
data. He's playing. It's
playing
true.
games.
What do you think of the music?
I love it.
Are you feeling it?
It's jazzy.
Yeah. I would rather play the one that talks about like going to the beach or something like that. That's what I'm in the mood for.
We can do that too.
Yeah, like the one about the white sand beaches. That's what I'm feeling right now because
Surfing USA.
something like that. I mean, in Dallas, it's ridiculous right now. This is not what's supposed to happen here.
Happens.
You guys, if you're not from Dallas, you need to know that right now it's like 0 degrees outside. No, it's freezing. This is crazy weather here. We don't do this in
It's
Dallas.
not quite freezing yet.
And it's supposed to snow tomorrow.
Mm-hmm.
So it's 35. Really, this is Dallas and it's 35. I mean, what the heck? What has happened here? What have you people done? Who's moved here that's brought the cold weather with them? Where are my Canada buyers? I brought it up because this weather is ridiculous. I'm going to be
not from Greenland.
Okay, so you know what happens about this time every year is I start pushing the master here to go on a cruise. I get cruise fever. I really do, because I'm like, I want sunny skies.
I think we should just go down to Tahiti.
Or Tahiti.
Fiji,
well, that's an option. It's just a little more complicated. All right, look who's here. Hey, Rhonda. Let's see if we can put this on there. Hi, Rhonda. How are you? It's good to see you. I'm wondering too, like if you're local and if you also have cruise fever, because I'm getting it bad. The colder it gets, the more I want to go out where it's sunshiny. I get the cruise fever. So today we're going to talk about the market doing some weird stuff. Okay. It's doing, weird? Yeah. I mean, it's,
X-Files.
it's, I don't know if it's X-Files. Oh my goodness. Look, it's a familiar face. We know her. Hey, Amelia. How are you?
Hey,
Amelia. We know
What's
Amelia. Hey. That's good to see you. I'm very interested in your thoughts on this ridiculous weather too, because, you haven't been here, that long. And Rhonda says, Oklahoma here. I think you guys are supposed to get more snow than us. So it is probably worse for you guys.
Yeah.
Still, I'm not abused.
That's why we don't live up there.
Mm-hmm. Now, I will tell you guys, so we're
trying to push for it to make it illegal to snow in Texas.
Yeah, like that's going to work. We live at the bottom of a hill. And so when it snows, everything stops and the street kind of ends in a circle. And so nobody can get out. We're stuck. Like, you'll hear people kind of, skidding out on the hill and then just giving up, going home again. So our whole neighborhood's, this little area is about to shut down because we just don't do snow around here. So now one thing we do is like all the kids come out and they sled right down the street because there's no cars. Oh, Amelia, not a fan of the cold.
Yes. Don't go drive because people are crazy. Only if you're crazy like me. I'll go do showings during the ice and stuff. That's fine.
Yeah, he was literally just saying that. He was saying he was going out tomorrow for a final walkthrough. And I was like, I'm sure you can go another time. He's like, nope, we got to go. We're closing next week. I'm like, no, don't go out in the snow. Yeah, he knows how to drive. That doesn't mean everyone else does. All right, you talk. I'm going to try to change this setting over here.
Why are we talking about weather so much?
I don't know, because
it does affect the market, though. I mean, this is a slow time, and
that is true.
We're talking to some people about showings and open houses and stuff, and people don't want to go to open houses right now. So, but I do see a lot of listings that people are scheduling a lot of open houses. So yeah, if you want to go see some houses,
because we can't get the real estate to move in the coolness of January, and so everybody's like, well, we got to do open houses. We got to get interest here.
Januaries are usually the slowest, the lowest point in the price, but that's what we're talking about.
Usually is the operative word there, guys. Usually, and how many times have I preached that? I mean, that seasonality is a thing, and the prices bottom out in January. So, imagine my surprise when I log on, start looking at the analytics, and in fact, I want to show you guys this, okay? Because this is really kind of a shocker for me. Hopefully you can see that okay. But I started all the way down here in 2014. So we're talking 10 years of this. I hope you guys can see that okay. Can you see that okay? Hopefully it's not too small. But you can see all these red lines. These are all Januaries. Like literally every January, we bottom out right here. Even in the crazy years, of 2020 and 2021, we had like fast appreciation. We still bottomed out, right? So there's June. It's always like June and July, and then we bottom out and bottom out. I'll check out January.
This year,
Check
2025.
out January of 2025, and please tell me what in the world is going on there, because that's not supposed to happen. Okay, we're not supposed to see this uptick in January. Everything's supposed to go down. And so I want to know why this is happening. So I dug into some research, found a couple articles about it. I think a lot of this, as we dig into this, we're going to see so much of this hinges on interest rates. But what is this going to mean for us, right? Does this mean that prices are going to go up from here? What do you think?
Well, if interest rates come down.
Yeah, tell me your opinion, Master.
I do know that every new construction community and sales consultant, different builders, all of them said they were raising their prices in January. So
yeah, and that was. Do you think that was when they thought rates were going to go down?
No, I just think it's for them. It's probably just January, and a lot of them were also getting. It's interesting that a lot of them, almost all of them, were starting new phases too, or just started new phases. So that has a lot to do with it too. But yeah, I think we've been so all of last year, we talked about the whole entire year, starting in January, all the way through, talked about rates going down. It did go down in January last year. And so there was a higher sales time last year than it was usually. But then they went up. And so spring was much slower. Summer was much slower, but still, I mean, it would follow the typical seasonality. I mean, I guess, generally.
In fact, I'm gonna show you this. I'm gonna show you on. Well, first of all, let me show you this article that I found about this. And I got to tell you, this article is kind of funny because literally, it always amuses me when this happens. I'll get articles back to back, and one article was about how poorly Dallas was doing. Literally in email, right? So I get an email. It's talking about how Dallas is doing so badly, and then I see like this literally the next email. DFW saw largest home sales jump in recent years, but things aren't all sunny and cheery. And I just thought that was hilarious that the largest home sales. By the way, guys, as I'm reading this, you have to keep in mind, it's not prices here. They're talking about volume. Okay. Yeah. So you always have to keep that in mind because it's easy to think that they're talking about prices. They're not talking about prices. They're talking about volume. Okay. Excuse me. Wow. You put something in this drink. By the way, guys, look, he got me a new cup. I'm going to show you this. I got to bring this and make it big. I told him that I wanted a cup that didn't, get condensation for Christmas. And lo and behold, the man came through. So I just feel like we need to put on some applause for that. He did a great job. All right. Anyway, back to this article. Concerns about property taxes, insurance, and mortgage rates continue. And guys, I really want you to be cognizant of the mortgage rate issue, okay? Because that's going to come back. We're going to talk about that here in a minute and how that's driving the market. November home sales in Dallas-Fort Worth showed the strongest year-over-year improvement since mid-2021, but those who watch the market closely have some concerns. Now, what I want you to think about when you're reading stats like that is that where did these November closings come from? Okay. They originated in October.
All right.
Okay. Or they originated in mid-September. And so we're going to look at some interest rate charts here in a minute that's going to show us this. So when you see that November home sales were strong, we're going to look backwards here and we're going to see what rates were like a month before that. Okay. And you're going to see it's very revealing. Prices have appeared to flatten, but they remain high. Yeah. I think it's a very true. Down.
Yeah.
I think that's a very true statement. Is
stop going up. But
they have flattened. So we haven't seen like this steep decline other than a seasonal decline, right? But we haven't seen, and yet they flattened. And so that's not necessarily the way it is across the country. In some places, prices have gone up. So let me continue here. Let's see what we have. Mortgage rates continue to fluctuate as concerns about future inflation linger. Okay. And that's where we're at a big issue here.
And Dallas is a very rate sensitive area. So Dallas-Fort Worth, yeah.
extremely rate sensitive. Homes are taking longer to sell. Conditions favor buyers, but concerns about long-term supply continue. That's a very interesting comment, I thought. That they're taking longer to sell, and yet we still feel like we have a housing shortage because we're concerned about long-term supply. I'm like, isn't that kind of an oxymoron? Although the numbers this year might show a slight improvement compared to last year, by no means are things all sunny and cheery. Things right now are nothing like the hot real estate market we enjoyed here in Dallas-Fort Worth. Okay, Dallas-Fort Worth is no longer the super affordable relocation destination that it used to be. Truer words were never spoken.
But I would say it's still much more affordable than a lot of other places.
That is true. That is true. And we get buyers of both kinds.
It's not just the homes prices. It's job availability and
very true.
Price, cost of living, and all these other things that go along with it too. So.
Yeah. Excellent. I mean, that's very true. I think gone are the days when Dallas was this super affordable, I mean, I know I've told you guys several times when we bought our first house, it was $54,000, which I know, putting in perspective, that's an inflation thing, obviously, but we were able to get it comparable to what we would pay for an apartment. And we had a ton of choices, and we did not have a high income, but there was a ton. We had to look for a really long time. And so it's definitely, and rates were 7% at that time.
Yeah.
So
that'll be when you get to the rate charts and everything. It'll be interesting. There's some things I've read, and I've kind of been saying this for a long time. We've been spoiled about rates for a long time, anyway, even though rates are higher.
It's so true.
Higher.
Right. Yeah, exactly.
They're lower than what they've predominantly been over decades. So,
and what you guys have to keep in mind, especially when we think about this whole issue of sellers paying the buyer agent commission, as that if the rates go down and we get like a strong seller's market, we'll probably see a change there. To where maybe the seller doesn't have to. Because remember, and I always tell my new buyers this, is that, a seller pays for a service when he's paying his seller's realtor, right? He's paying for a service. But when he pays the buyer's realtor, that's really a marketing budget. That's his marketing dollars, right? And
trying
so
to find good
exactly.
buyers. Yeah.
He's trying to market his house the best way possible. So he says that he's willing to pay a buyer agent. And so you have to think about the fact that if he doesn't need to spend on that marketing, that they may not be as willing. So I think we have to be really aware of interest rates for that reason. Let's see what P has to say. Dallas job market is slowing down, and also Dallas now is negative migration this year. I didn't read that it was negative, but I did read that it was down. Right.
The job, but
that it was less.
The job market is down most everywhere, though. So
Yeah. I did read it that it was less, that the migration was less. I didn't necessarily read that there was negative. I'm not really fully sure what you mean by that. Also, negative migration. If it's that more people moved out than moved in, I didn't see that. I would be very interested in seeing the source on that. I would be. But I do think migration is down, and I have heard that about the job market also. Okay, so let's see what he said here. Okay, it's a similar story in Dallas County. Okay, now I agree with that about Dallas County because it's mostly landlocked.
Right.
And so you actually do see people going to the exurbs. Okay. Worst county in the country for negative net domestic migration.
Okay, that makes for Dallas County.
That makes sense. Okay, that makes sense. Yeah.
We're talking about the Dallas-Fort Worth area, which includes Dallas County, Tarrant County, Ellis County, Collin County, Johnson County.
Right.
Where else am I? Denton County.
And Collin County is the one that is so densely populated that is growing so fast. That's the one is Collin County. So probably if we looked at those numbers, we would see that the migration was quite high. But yeah, I agree with you about Dallas County. It's landlocked, and the schools as a whole in Dallas County, you may have a few that have good rates, but for the most part that have the good school ratings, but it's definitely few and far between.
I'm back.
Okay.
Quick break.
Opening the door for the dog. You guys, our dogs always join us on these live streams, and they don't always behave. I'm just being honest with you. All right, let's see where we were. Okay. According to RE/MAX's latest national housing report, nearly 6,800 homes were sold in Dallas-Fort Worth last month. That's a year-over-year increase of 15.6%, the largest such increase in 2024. Okay, so keep in mind they're talking about, and again, we want to think about November, December, where were rates 4 to 6 weeks before then when they first went under contract, right? So that's a big question. Data released by the Texas A&M Real Estate Research Center, the Metro Tex Association of Realtors, and the North Texas Real Estate Information Systems show similar trends. The report counts 6,800 closed transactions in November, a more than 14% increase from last year. That's the largest annual increase in sales since May of 2021. October saw strong sales as well, a 13.4% jump over its 2023 pace. So yeah, overall, I mean, the fall was stronger, that late fall period, usually when everything's sort of bottoming out, it was stronger. All right, let's see here now. Okay, I thought this chart was really interesting. The chart shows the year-over-year increase or decrease in home sales in Dallas-Fort Worth from January 2021 to November 2024. Okay, and so that really
numbers of
and so again, this is volume, not price. Okay, so keep that in mind. This is number of homes sold, but still very interesting chart there. The median price of a DFW home was $395,000, up just over 1% from November of 2023. Another closely watched housing measure shows Dallas metro prices are only slightly above what they were last year. Okay. I find interesting, I've seen a lot of videos about how, like the market's crashing, but really I would call it more, it's sort of flat.
It's slowing down,
yeah. And I wouldn't say that it's,
at least not here, it's not crashing.
Right. And the numbers there are showing October, November, kind of a weird situation there. Okay. DFW home prices were up less than 1% in October compared to the previous year. Add this for you guys. That's well below. So this is kind of what I was alluding to. That's well below the 3.6% increase nationally. Okay. And so, like I said, we are seeing, nationally, we definitely are behind,
from the sales price.
Yeah. From the sales price.
Which is a good thing for Dallas-Fort Worth.
Yeah. So it's not completely unaffordable here.
Yeah.
Although it's just not the glory days that it was. Oh, goodness. Okay. These prices are down from historic highs in 2022, but remain well above pre-COVID levels. In January of 2020, the median price of a DFW home was just over $267,000.
Wow.
So wow. So and that's where, even with inflation slowing down, we really haven't seen anywhere close to returning, to where we were. So what did it say? 395 was where we currently are, and it was 267. Yeah. Active listings remain high in North Texas, a trend seen throughout 2024. I definitely agree with that. There were nearly 29,000 active listings in November, a 32.6% increase from last year, according to North Texas Real Estate Information Systems data. Guys, we have definitely seen that. We have 100% seen that increase in supply all year. We see it, when they talk about, that percentage of increase, we know what it's not including. Right. It's not including all of the new construction.
New construction. Right.
Yeah. I mean,
and new construction was a little bit down, but because Dallas-Fort Worth was always higher than Houston in new construction, but in all of 2024, Houston was had more new construction than Dallas-Fort Worth. So.
All right, this is a good question right here, and I bet you can guess exactly how I'm going to answer it. For new homes, how much percent roughly should we offer from the listing price, and what incentives should we ask? What do you think I'm going to answer this? I'm just guessing. Like, what does he think? Can you read my mind? What do you think? What do you think?
You should ask them.
Okay, here's my take on that. This is not about list price.
Right.
Okay, it is not about list price. Okay, we have got to stop believing that lie. List price has nothing to do with value. Okay, so if you can get that in your mind, you've got to have a market analysis first. I've seen homes that are overpriced by $100,000. Okay, so even if you came in offering 70% of list price, you would still be upside down.
And value changes by location.
Yes. Yeah. So you're not really asking the right question there. It would be more, how much percent should we offer from actual value?
Mhm.
Okay. And what incentive should we ask? That would be
And then
more
you
of an
might
accurate.
talk to a real estate agent and see where trends are going for that
Mhm.
area,
Yeah.
where they were coming. Like, I mean, okay, I'll give you an example of working with a client, and we've been looking at the Harvest community and out in Argyle, North Lake area for a long time. And Harvest is one of these interesting places where actually home prices have been going up over there this time of the year and stuff. But they also still have a lot of new construction going on. It's almost complete, but it's still a lot, and it's a very high demand community. And so the pre-owned homes may sit on the market for a while, but the price overall, the trends are that the prices are going up there. So that means that buyers are willing to pay for more. So that means the market values are going up there. So
It's just kind of a pocket, like a micro market there, which is so it's not true of the Metroplex as a whole, right? But you get little pockets like that. And so that's a big one too, that you can't make a generalization over the whole area. But for sure, you get a market analysis first. Okay. You never negotiate off the list price. The list price, like they both start with an L. List price is a lie. Okay. Let's just go there. Right now I've seen several of the,
I would tell you though, if you look at list prices and then look and compare that with days on the market for when a home has sold this time of the year right now, since the beginning of school, you'll see that the list prices are lower for the ones that had lower days on the market. So
yeah.
Ones that started like in the spring and are still on the market and such because they believe they were going to higher prices, their list prices are higher. So and their days on the market are higher.
Salal says, yes, the value of the house for the Wiley and Frisco area. Yeah. So that's more, your accurate question. Yeah. I will tell you right now, even our more notable YouTube Dallas channels are doing these big advertisements about, $100,000 price top. And you can see their thumbnail will be like, 70,000, 125,000. And I'm like, why are you just, putting out this bad information? Indicating that this is a deal when it could still be completely overpriced, don't advertise that. So for the value of the house, what I would do, again, you're talking about a micro market, is I'd be like, okay, what community? Okay. And then I would look at the sold homes and I would see what has the builder been accepting, right? So that's going to give me a lot of information. I'm going to look at that. That CMA of sold homes is going to give me a ton of information. It's going to tell me what percentage, of price they've been accepting. It's going to tell me their exposure. I'm going to see how much is out there. I'm also going to look at the listing and see how much have they been paying towards the buyer's closing costs, because that's a big one too. A lot of times we will have the sales consultant say, we'll come down on price, or we'll give you an incentive towards closing costs, but we never do both. And then at that point I respond with, well, yeah, you do. Here's the data. And they don't know what to think because they don't know that we're going to look that up before we have this conversation. Yeah, you do both. So in answer to your question, I would want to go market by market, micro market, right? So if you're talking about Wiley, I'm pinpointing maybe Inspiration, right? Or what's that other one? The Valley one? Dominion. Dominion of Pleasant Valley. So I might target that one. And with Frisco and really Wiley and Frisco, hugely different.
And like, for instance, in general, Frisco has been kind of flat with sales price. It's been overall, but there's one, I know of a specific area of 75033 where the sales price since October has been gone way up, and the days on the market is going way down, and the price per square foot is going up. So
Very micro local.
Yeah. So it just depends. Yeah.
Yeah. So whatever realtor you use, whatever location you're in, always insist on market data. Okay. Make them do their job.
Yeah.
That sounds terrible. But make them do their job. Okay. Let's take another look here. So we know that supply is definitely up. From listings to final close, homes were on the market for an average of 90 days. Okay, that's is fun. Crazy. That is so high. An average of 90 days. You'd have to know, like during COVID, it was crazy short, you know. But when you read that, though, keep in mind again when we saw our sales trough the bottom, right, and when we saw them going up again, is that think about that 60 to 90 days, like when they went under contract. You know, that's very telling as well. Real estate company Zillow's market heat index rates the DFW housing market as neutral, moving more in favor of buyers since July. So. Neutral, I mean, I kind of see it as a little bit more advantage to the buyer. You know, I wouldn't necessarily say neutral for sure, not seller.
I think it's because I think they probably say it because it really depends on the neighborhoods and areas and stuff like that. Because there are definitely some areas that are
like you were talking about with harvest. November's strong numbers. Okay, now here's where we're getting to the good stuff. Okay, November's stronger numbers have some caveats. Okay, said this guy whose name I can't pronounce, a real estate and finance professor at the University of Texas at Arlington. Okay, here we go. Buyers who closed transactions in November may have locked in their rates in late September when the average 30-year mortgage was just over 5%. So wow. There you go. That has, and I'm going to show you in just a minute the interest rate trend. But that's really what has just kind of messed with our seasonal patterns that are usually so predictable.
Right.
Usually we know exactly what the market's going to do. And so it's kind of messed with our seasonal patterns there. Mortgage rates were also higher during the same period in 2023, contributing to fewer closed transactions. The average 30-year mortgage rate was above 7%. In the latter part of 2023. Right. And that's true. So you have two extremes because they were like at their apex in October of 2023 and then so much lower. I think there was like so much excitement over rates going down like permanently, like trending down. So this is overall, I think what rates are doing has been very demoralizing. I think for a lot of people.
We have to take it in. I still think buyers need to take in consideration to what it has been over the decades and stuff and that.
Yeah. That is purely the interest rate. At this point, people saw an opportunity. It's a reasonable sweet spot. Okay. It's a combination of things. Lower interest rates, so more people qualify for a loan and prices have started to show signs of stability. People think it's a good time to jump in.
The other thing that I think buyers need to consider too, if they want rates to come down, that means it's going to go towards a seller's market because there's going to be much more buyers in. And so there's going to be more competition and prices will go up. So you got to kind of figure out what you want here. So
remember that series of videos I did like a year ago where I was talking about like, do you buy now or buy later? And I was like, well, if you want rock bottom prices, you buy when interest rates are high. But if it's all about the monthly expense, you want to get in, when interest rates are low. And that's that idea. There's definitely just a really strong correlation. Let's see here now. Here we go, guys. Okay, here's where the good stuff is. And we showed you this here in a minute ago. The pattern troughed in September. So I don't know if you guys can see this at the very end, okay? We usually see January be really low, but instead we saw our bottom in September, okay? So what interest rates were people buying at that closed in September? Okay, they were buying at what was going on in July and August. Okay, and so that's where we saw it so low. So when we see a seasonal pattern with rates the way they usually are, okay, it troughs out. And this is where we saw it bottom up, and then we saw it go up. So usually prices would be bottoming out in January.
And that's, I guess, so in previous years, we haven't had as much volatility in of rates. Stock market, there's a lot of volatility, rates, the 10-year treasury bonds, a lot of volatility, it's we're trying to consider, are we still in inflation? Are we doing deflation? And then there's a lot of volatility in other countries' economics too, economies as well, which any other major country is going to affect every other country's economies as well. So
we were just reading an article about that, about how the change in China, how it would impact the United States and the carryover. It was a really good article. Okay, so you can see right here, that it troughed in September. It's not what we would expect, and then here we are in January. And I think the bulls are going to say prices are only going to go up from here. Buy now, because prices are already going up. Okay, but I want to show you this. Okay, so increase in buying power is what affected this trend. Okay, because remember, even the ones that closed in January, they got their interest rates back in, maybe October.
Yeah.
And they locked it in. All right, here is my interest rate chart. Okay, do you guys see that? Do you see that red arrow? That is where rates were in October. Okay, so do you see that degree of change, that volatility that we've seen? So rates dropping out like that. So when you see that low, period in October, that's what supported, all this place where the rates were going down. This all supported what we saw in November.
Yeah, and it followed exactly what the 10-year Treasury bond was. The 10-year Treasury was that same time. So, and that's what this article that we were reading does too. That 30-year mortgage rates have always followed the 10-year Treasury rates, but there's always been kind of a spread. Now the spread is a lot tighter, so it's following it much closer.
Yeah.
So,
to me, this chart tells me that I shouldn't assume that prices are going to go up. And the reason is because interest rates are going up. I mean, that's just a painful trajectory right there, guys. This is where we were, I don't know if you guys can see here. Let me see if I can show you that way. This is where we were in October. And then just, that going up.
How much longer they keep going up.
Yeah.
That depends on a lot of things.
So I am kind of anticipating, kind of wondering if we're going to see a change in seasonality, right now. I think that some people are going to imply that this means that prices are going up, that this section and that, I'm sorry, the price chart. I think some people are going to imply that prices are going to go up from here and you need to jump in now. That typical FOMO to jump in, right? Get in the market now. I think that maybe we need to be a little bit more aware of what rates are doing right now, because if rates are going up, we know that's going to affect the market. Okay. So to me, this all was very illuminating to me. I kind of went in there thinking, I know what I'm going to see. I'm going to see prices dropping out in January. And I was like, wait, this isn't supposed to happen. Like, how is this possible? And so I kind of like, when I read that Dallas Morning News article, I was like, what's going on here? It makes complete sense when you see what interest rates did.
Yeah.
I'm interested to hear you guys' opinions. Please comment. What do you think interest rates should do? What do you think they're going to do?
What they should do.
What they should do. What
we can control them.
What you want them to do. Do you want them to go down? Because obviously,
and what like anybody can predict them as well too. So
I know, but obviously
there's a lot of things going on in several different economies, and so there's
I mean, literally, interest rates were enough to break what we usually see for seasonality.
Yeah.
I mean, they were enough to cause us to see prices to go up.
I'll give you my opinion. My opinion is it would just be nice if they just kind of stabilized. They don't necessarily need to go lower or anything like that, but they would just stabilize. Then you would just get in a nice trend again. And, and you'd have times, people can predict when's a good time to buy and such like that. So I think that's the best. I think that would be best for the economy overall. So best for the real estate market. It doesn't necessarily need to go down. So
I think, shout out to forward commitments.
Yeah.
I mean, big shout out. Big shout out to forward commitments.
If you want new construction,
If you want new construction, those forward commitments are a gold mine, because that, if you guys aren't familiar with what I mean by that, the forward commitment is when a builder offers you a fixed rate, 4%, 30-year fixed rate as a forward commitment.
But here's another thing to think about from a deal looking at it. Maybe you look in areas where there's still a lot of new construction going on, a lot of new construction sales, and it's a large enough area that there's pre-owned sales there too. Maybe you find a home that's not quite so old, decent deal because they're trying to compete against the new construction, so they put their prices down a little bit. It's a good deal.
Yeah. Although
Maybe
if you can't get a 4% interest rate,
yeah. But
I mean, I was having a conversation.
Again, it's like you said. Okay, are you looking for the monthly cost, or are you looking for an actual good investment deal on a home? So
right. I was talking with a buyer earlier who they know that they're going to move in a couple years, and I was saying don't buy in a community that has multiple phases, because these poor sellers that have to compete against new construction, it's a killer. Your home's lived in. You can't offer the incentives.
Depending on how long you want to stay there,
Yeah. So if you're going to stay there a while,
less than 5 years, I would say that's true.
Yeah. Let's see what Rhonda has to say. Rhonda, I think there are a lot of changes coming for this year that might not have ever happened before.
Yeah.
I think there's potential for that. And then she says, lots of hope in the future. I kind of agree with you. New administration, I think it's going to be really interesting. I think the DOGE, is that what you call it? The Department of Government Efficiency. I think what they can do, I think what they can do, because the biggest concern and the reason these rates are so volatile has to do with inflation and debt. So the more debt you have, the higher the treasury bonds have to go. The higher the treasury bonds, the higher it drives mortgage rates. And so I think that, but guys, if you don't know what a forward commitment is, it's when a builder offers a 4%, 30-year fixed on a specific house. Okay. So this is completely different than a rate buy down.
Yep.
And I don't necessarily encourage like the 2-1s buy downs where your mortgage is going to adjust back up. Because I think we've already seen, we don't know what interest rates are going to do. They're very volatile. I think there's a lot of risk there, unless you can afford the final price.
Yeah.
If you know for sure you can afford the final price, then I could see it. But otherwise, go for these forward commitments. And I would say, as much as I want to negotiate bottom barrel prices, I think as long as if you're paying market value, I think a forward commitment is worth it. I think, that if you're, if they're like, okay, we know for sure it's market value. If I can get a 4% interest rate, to me, that's where the win is right now, because you've got interest rates that are holding values flat.
Yeah, we'll have to see what happens after this month, probably, to see what builders will may be doing that or not doing that. So, I'm sure they're not deciding to do that right now. I think there was a couple. I think I saw some D.R. Hortons and maybe somebody else. I can't remember right off, but yeah.
Take a look at this chart. This is Netra's trends, and I like to kind of look at 5 years here. And this shows the median sales price. So, we were talking about how it's very flat, right? It's not at all crashing, but at the same time, we would anticipate more of a drop this time of year in January. Looking at days.
If you go back to the other Januaries.
Yeah, especially if you look back at these other Januaries, you can see a very visible drop every January. The one I showed earlier was our 10-year, where it's even more visible, where every single January it bottoms out and then goes back up. And so very strange, this little section here. When we look at days on the market, though, I think this is very telling for if we want to think about what's going up in the future. Do we believe the narrative that we've come into an era where prices are going to skyrocket just because January has done this really weird thing? Or what is February going to do? What are we going to see? Right now, what we're seeing in January is what was under contract in November and December. Right. So you always have to realize that the current data is basically retroactive. Okay, let me see here now. So this right here is days on market. Okay, so that kind of speaks to
overall.
Right. So this is overall days on the market. So we're up. Okay, days on the market.
typical for this time
All right,
of year.
is up 46 days in the market. Okay, so it's up 27.8%. Now,
What was it? Go
oh,
back
yeah,
like last year
days
and
on
then the day
market.
before.
That's a good point. So days on the market, 2021, we knew that was going to be
That's
short.
December.
2022. Oh, okay, December. Sorry. There we go.
Yeah.
12.
Yep.
Okay.
Okay. So
But
go
then
back.
2023.
Okay. There you go. Yeah.
39.
So it's about the same.
January 42, and now we're at 46.
Yeah.
So even though we saw prices going up in January, okay, if you can picture days on the market is going to be a little different, right?
This is the anomaly year here. So
yeah, smaller days on the market because of the interest rates.
All the crazy stuff. Yeah.
Yeah.
Yeah. So.
Yep. Guys, I'm interested to hear your thoughts on this. Let's take a look at homes for sale. What's our volume doing? Guys, this is also very predictable. This is what you would anticipate. Homes for sale in January are going to be lower. All right, because people don't want to move in the dead of winter. Dead of winter. Freaking 30 degrees outside. I guess that's the dead of winter for here. New listings are also going to be way down. And this is not a surprise. This is what you would expect this time of year. So that's very much correlating. Closed sales up 11%. Okay, so that's what you wouldn't expect.
The other Januaries.
So where are my other December and Januaries? Okay, so they're all down. Yeah, so even if you start right here, you can see December and January are down.
Yeah.
Okay, December and January down. You can see that every year it's like that. And then we have this weird year where it's up.
Going up, yeah.
Shows per listing. Whew, it's a dead market out there. We can't get people to get out there and look at those houses. Do we look at month supply? All right, month supply. This shows that it's the month supply is down. It's been going up here.
Going up since what? That's
January 2022.
That's the hot year. But if you go back before that, you can kind of tell we're probably the typical.
Yeah. So month supply is a little bit down. So interesting things in the market. What would you say about all this? What do you think? You think we're in for a time of prices skyrocketing?
No, we've never. The only probably really our 20, 21, 22 was really the only time we had the skyrocketing. Yeah. This typically doesn't do that here. And maybe it might start going up again. I mean, there's still businesses moving this way and everything, but it's just kind of because of the inflation and everything and the way the economy. The economy all year has been going down, and we've probably actually been in a recession most of the year already, though government doesn't want to admit that, and the economists don't want to admit that. But that's probably so. It will depend. I mean, a lot of it's going to depend on what happens to the other economies and stuff. But maybe we'll just kind of steady out going forward. That's what I kind of think it's looking like, but it's hard to say. So we don't know. There are just so many things that can affect. There's so many things up in the air right now. So
One thing I had read is that people are beginning to understand that rates aren't changing, and they're giving up on being locked in by their low interest rates. So all of these people at 3% rates who, they've had 2 kids since then, or for whatever reason, they're like, okay, we're going to have to move anyway. So there's kind of a radical acceptance of having to accept these higher rates. So I think that could bring buyers into the market. But I would say unusual shift of January going up, but I don't necessarily think that's a trend.
Yeah, I don't. Yeah,
because of what interest rates are doing.
We had a weird trend like that last year too, because the rates came down.
That's true.
In January last year, and so there was a lot more activity than there normally would be in January. But then the rates went back up, and so normally when it be catching and building up a lot in February, March, all that, it slowed down, and so we had a slow spring. So yeah.
So I think this chart that I put on here really shows what interest rates have done. And when we saw January prices go up, you have to remember that it was dealing with this time period where rates were somewhat lower, and now we're up here. Okay. So, so a couple, kind of takeaways from that is that don't blame your loan officer if he gives you a higher rate. I promise you he's not a crook. He's really isn't. This is truly what rates have done. And then also to not go into it assuming, oh, because this is interest rates. Again, this picture that I'm showing you right here is interest rates and what they've done. And so we may very well see our seasonal drops extend longer than we would expect. Okay, right? Because typically, and we talk about this, I was talking about this with a couple different buyers just today, is that typically we anticipate by the time people get their tax returns to see the market start easing up again. I don't necessarily want to hang on that this year with rates going higher. I think we could have a very kind of stale spring market. But rates will tell the story for sure. But yeah, so I think, guys, I would say that, we saw an unusual drop. We kind of saw a break in seasonality there. Prices going up. I don't necessarily think that means you should offer more aggressively. I think that you need to hang on. I think too, like whoever you use as a realtor too, whatever. And I realize that not everybody here is in the Dallas area. Okay. So whoever you use as a realtor, I would say make sure you get the market data and go micro local, like Dale was saying, go micro local because every market is different, but don't go in knowing that if you watch a video that says January sales spiked, don't assume that means you need to make more aggressive offers.
Yeah.
Okay. That would be my big takeaway here. And again, because of what interest rates are doing here. Yeah. Okay. Because of where we see October dictated December's closings. The January closings are going to be dictated like by November and December when the rates were lower. And now here is where we are right now. So lots of good info, lots to think about, a lot of food for thought. I didn't expect this when I saw the January numbers. That's not really what I expected because historically always we bottom out in January. So this is going to go along as an anomaly of what the heck happened in, 2024 and 2025. I think people are going to look at that and go, that's a hiccup. Yeah. I almost want to predict that in February, we're going to see a drop.
Yeah. Like we did last year.
Yeah. I think what that we'll see, maybe we will see our trough in February this year instead because of what interest rates are doing.
Yeah. Cool.
All right. You guys, I don't see any other comments. So I think we are going to let you go. We're going to go get some dinner. If you're in the Dallas area, stay safe tomorrow. Stay off the roads because it is supposed to actually snow, which is really weird. Rhonda says, thank you for your great research and info. Anytime, Rhonda, that's what we're here for. We are the data drivers. Yeah. We really feel like it's super important that you be informed anytime you're buying, that the data tells you so much, a lot of power in that. So. All right. Well, you guys have a good evening. We'll talk to you again soon. Bye-bye.